people? Welcome back to another episode of Mornings with Mike. I'm exhausted. I don't know why I look so tired. But today's morning session is going to be a little bit different. We usually trade Nas. We're not going to be looking at Nas today. We're actually going to be listening to ICT's live Twitter space and looking at the S&P with him. So without any further ado, let's go ahead and do that. My computer had died the first time I was making this video, so I need to move everything. All right.
Economic calendar and the effects of liquidity and how the markets will abruptly reprice to a specific.
And the reason that we are doing this, I left so I can talk real quick. The reason that we are going to be doing this today is because the CPI numbers are going to be dropping at about 19 minutes. So we're going to go ahead and listen for that. We're going to see what the chart does and what he says about it. And I just think it'll be valuable information for everyone.
I think might unfold today, and I might be wrong. Okay. But here's what I want you to do. I want you to be in a paper trading account. I want you to push a button, okay, on a paper trading account. That means it's not a live account. I want you to feel what it feels like to be in there trying to push the button. And TradingView probably isn't going to let you enter. They always mess with the ability to get in on a market move like this. It's so aggressive and highly manipulated. If you go into these types of days thinking, unless you're going in minutes, right before the report's released and you're gambling, and that is reckless. It's not advised. It's really stupid to do that. If you push a button that's in this market move this morning with a live account, I'm telling you, you're going to regret it. So don't do it, okay? What we're doing is we're doing an interactive study, looking at how prices right now, where the liquidity pools are, I'm going to go over in a moment, and then what they go for and how fast it gets there, and then what it does once it goes to them, okay? I do not have an interest in pushing a button in my live accounts. I have no interest in doing that. I will not be doing it. So if I'm not doing it, please listen to me. Do not use this as an invitation to go in and push a live account button and hurt yourself. Okay. If what we outlined today pans out and it's, precise or whatever, it's just an experience for you to log in your journal and you observed it live. That's experience that you want to be doing this. Every time there's a high impact or medium impact news driver, you want to do what I'm going to do today. Okay. And if you do it every single day, studying how the market does these types of things, that experience is going to build over time. And you'll start seeing things that my lessons and my videos won't fully put you into a style of trading that you can't really understand yet. And what I mean by that is you're not going to know what it is you're doing as a trader until you discover seeing it over and over again at the charts. And you're probably thinking, well, why don't we all see the same thing? You're all looking at different time frames, different markets, and your opinion and your personality is going to vary across all different cultures and demographics. You're all going to be wanting to do something different. And that's the wonderful thing about the tools I've given you. You can carve out your own niche and be unique and still use my concepts and feel good that it's yours. It's your model. You built it yourself. That way you can feel confident about going forward and not leaning on me through codependence. You don't want to do that. You don't want to do it with any mentor. You don't want to have any chain to their product. You don't want to have any chain to their signal service. You don't want to have any kind of tethering at all for their advice or their opinion. You want to be an independent mind, going in, making your own decisions. And if they're good, you take all the glory for that. If it's bad, you eat that. That's just the way it is, okay? If you don't have that mindset or if you can't cultivate that, trading is not going to work out for you. So with all that risk disclaimer such out of the way, and I apologize if I bored the socks off of you, but I have to make sure that the folks that are coming in here aren't going to think that, hey, this is casino time. Let's get in there and risk it all. No, please don't do that. Okay. All right. So now US 500 on the hourly chart If you have as much as, let's see, what's the date on that? If you go back and look at the 28th of October, okay, you'll see about the 1600. Now my time is UTC -5. Okay, so that way you know what I'm looking at time-wise. And the candle I'm looking at for US 500 on the hourly chart at the 1600 hour on Friday, October 28th, 2022. That high, and then just to the right of it, a few candles over on November 1st at, what was that, 8 o'clock in the morning. That high is slightly higher than that one prior to it. Okay, so we have relative equal highs there. We broke down, took out the low on the 10 o'clock hour on October 31st. Now, if you're complaining about this and say, I wish you would just show a chart, this is how you're going to do it. If you can't navigate based on what I'm talking about, well, it's a time, the time frame, you're not going to do well trading anyway. So this helps you feel confident that you're doing it with your own charts, your own scheme of colors, your layout, everything. But it should be a naked chart. I want you to notice how that rally up on Wednesday, November 2nd, 2022 at 1400 candle, rally all the way up to trade into that small little fair value gap that made that higher high on November 1st. We created an optimal trade entry and then broke down aggressively, took out the low formed on October 22nd, that Thursday at 1600 hours. We traded down on November 3rd, made that low, and then we failed to go any lower than that. So we tried 1, 2, 3 times to make a lower low. And there's lots of sell side liquidity resting right below that November 3rd low. So I want you to take a horizontal line and drop that on that low. So that way we know going forward, what am I expecting this morning? I'm of the opinion that we're going below that low. Now, I'm not pushing a button. I'm not risking money. I'm not taking a trade. I'm sharing my opinion as to why in a moment, but that's where I usually put that little eyeball icon that TradingView offers. I'm placing it right now, right underneath my chart. Those lows. Okay, so I believe that we're likely to see a trade down there. In the same hourly chart, from that low that was formed on November 3rd, we traded up to the high formed on November 8th of 2022, the 10 o'clock in the morning hour, made that high there, and then we had a shift in market structure that took out the low on November 8th of 2022 at 3 o'clock in the morning. That low was taken out on the candle of November 8th at the 1400 hour. And we traded back up into that city I talked about yesterday, and we broke down. Now we have a small little bear flag. Okay, this is what retail is seeing right now. There's a bear flag where the market has dropped and went below the lows I talked about yesterday. And the low specifically is November 7th at 3 o'clock in the morning, that low. We swept below that and we've consolidated. Now, if you look at the 3780, and again, we're looking at the US 500 hourly chart. If you look at the low on the candle of 1100 on November 9th, Wednesday's trading, okay? That low and the high of the candle at 1400, you'll see that there's a fair value gap right there. I want you to note that.
Yep.
Okay, so there's going to be a small little fair value gap that's approximately, and I'll share my chart after we've done this. This is kind of like a test for you. Your chart should look real close to mine. Do not share them. Don't post them. Don't try to be the first one. Just let me say this right now. It's irritating to me when people in the comment section or they reply first Yeah, that's annoying to me. Don't try to be the first to share your charts. Okay, right now it's interactive. We haven't even completely covered everything yet, but when we're done and I close the session, share your chart because I'm going to share mine at noon. That way you can compare and contrast what you've done listening to me and observing price. That way, if you're wrong, you'll learn from it. If you're right, it just feels good doing it. It feels good to do it. So we have that small little fair value gap. And look at that low on the 9th of November at 10 o'clock in the morning. Okay, see that low? That's essentially just about midpoint of that fair value gap. So it might want to revisit that if it spikes up there. I'm thinking this is what I'm expecting. I'm expecting price to jump up into that fair value gap, touch the very minimum of 3775.3. That should be your candle high on November 9th at 1400. And as much as, but it could color outside the lines here. This is why I don't like to trade this before it happens. But the low of 3786 on the candle at noon, November 9th. Okay, so that's your fair value gap. I'm thinking that we could run up into that.
I use the indicator.
Then it drops down for the sell side liquidity below 3694 or was it 3694.7. Okay, so that's what I'm expecting. That's what I'm anticipating. I think that is a probable profile for today for the CPI number. The problem with this is, and you probably have been seeing this if you've been studying the CPI number this year, the CPI number just comes out and it's just like a straight line. It's like, okay, we were here and now we're way down here. That's how fast it can happen. That's why it's very, very dangerous. So let's play devil's advocate for a moment. Okay, let's just say I'm right. And I'm not suggesting I'm going to be because I don't believe that anybody should be taking this advice. We're studying this. Okay, if I firmly believe that I was going to make money doing this and I could enter it, I'd be doing the trade. I'm not. I'm not even pushing a demo. I'm not doing that. I want you to do that. Okay, I want you to feel what it feels like to be in this. And then after you push the button, I want you to think about it being real. Think about what it would feel like, the anxiety or the exhilaration of whatever happens in the marketplace. Okay, I want you to feel that. But also, as soon as the number comes out and you see your market chart move around, I want you to try to press a button and see how long it takes before you ever get a confirmed fill on your paper trading account. Because you see all these folks out there, they'll show you that they got in on the very 1 minute candle near the high, right before the CPI number drops. That's bullshit. Okay, that's not happening. It ain't happening. Okay, you're not getting filled. So in a perfect world, say it wasn't a number that comes to market like CPI, I would take this trade on any other medium or high impact news driver. I would wait for it to trade up in that fair value gap. I'd use that as a shorting opportunity. And then I would look for it to run down to 36.94.50. And that's what I would look for. Okay. If I'm wrong and it completely blows out that fair value gap, then I'm wrong, and there you go. Then you know why I don't want to trade these markets. But if I'm right, it's not me patting myself on the back. I'm not going to champion it. I'm not going to be doing any kind of peacocking. But I want you to understand how fast this market will move. And I only got like 6 minutes to get the rest of this off. But I'm showing you where I think it's going to go. I'm co-signed. There's no side B to this. There's no scribbled line that's going to give me a bullish scenario. I think it only goes up, just get in that fair value gap, if at all. It may not even do that. But if it does, I would think that it would aggressively reprice down below that 36.94.50 level. Okay. And now the easy part for ES, the only thing you're going to be doing is looking at the US 500, everything I just outlined, your chart, while the prices don't agree exactly, the relative equal lows that were formed on the 3rd of November and what is that? This 4th of November, 8 o'clock in the morning, those relative equal lows. So that liquidity pool is the same on ES, and the fair value gap exists the same on the ES 1 hour chart. Okay. So I'm thinking slightly higher, and if it can, run up into that fair value gap and then crash down for the sell side. Once it gets to that sell side, I'm interested in seeing what it does that at that moment. So I'm not suggesting that I know what it's going to do beyond that. The only thing we're observing, and this is how I frame a trade, I'm not trying to go in and try to do, like with my examples, you'll see me do a session where I'll say, okay, this is where I think the market's going to go, and I'll point to, I'll say, note this level. What I'm saying is that's my bias, because if it's above the market price, that means I'm bullish for that session. Okay, that New York session or PM session, whatever it is that I'm referring to, the next session that we're in or about to begin, that's the next one I'm looking for. Right now, I just did it real time with you, telling you where I believe the market's going to draw to. But also prefacing it by saying, do not push it with a live account, because I might be wrong. And these numbers are dangerous. Like, they will manipulate the market incredibly, and it can hurt you very, very bad quickly. So don't do that. The only thing we're doing is studying how we see a trade set up. Is it likely to pan out? If it's good, just use it as experience. If it's wrong, be thankful that you didn't push it in a live account. And I'll tell you, this is the reason why I don't do it. Okay. Now, later in the afternoon, well, I really shouldn't say afternoon. Let's say 9:45. That way, there's 15 minutes after equities open at 9:30. Let them digest what the open does too. Then at that point, at 9:45 on CPI number days, then you can go in and trade the normal market conditions. But until like 8:30 to 9:45, man, you're in dangerous waters, especially if you don't know what you're talking about or what you're doing in the marketplace. And there's a lot of you that are like that, and that's who I'm talking to. I know there's a lot of people out here have experience, and they take offense to what I'm saying, like I'm talking to them. If you're profitable and you know what you've been doing, you've been around the block for a while, I'm not talking to you. Okay, I'm making sure people that don't know what they're doing aren't going to hurt themselves. Okay, so that's what we're looking for. We're going to sit here and watch in less than 2 minutes or so. The fireworks will happen, and if it runs up in the fair value gap, we're going to observe. If it rolls right through it and doesn't respect it and goes higher, which whatever. But if it goes in the fair value gap and then sells off, then you'll have something to observe, study, log it. And if you have the ability to record, and I use TechSmith's Camtasia Studio, it costs a little bit of money, but for study purposes, man, it's nice to be able to record live data, even if you're not in front of the charts. If you have a business, or if you're working, or if you're in school and you can't be in front of the charts real time, just set it to record, a 1 and 5 and 15-minute chart layout. And you can come back and it's totally different from watching like a market replay on TradingView. Market replay is kind of like stilted. It's not as fluid as you would expect to see real-time data. So to me, I think it's one of the best resources in addition to a journal. All right, so I think that is enough talking. We're going to see what pans out now. All the clicking is me just adding the things I added in commentary to my ES chart, because the only thing I marked up really was on the US 500 chart. So now what we have an outline of my opinion, what I think the market will likely do, and why should it do it. I believe that imbalance around on ES between, what is it, 37.
I'm not looking at this chart that he's talking about ES. I'm only looking at the S&P.
That's fair value. And if they want to sink it lower, they can take it to that point and then down below 37.04. Or just a straight dump rate to 37.04. There's the two outcomes I see. Otherwise, I'm dead in the water, wrong, and it just blows right through the fair value gap, and that'll be the end of it. All right, less than 15 seconds. Showtime.
So TradingView froze.
And that is why you don't want to do it.
Gee.
ES is ripped all the way up to 38.60 right now. And the US 500 chart is not doing anything for me over here.
It froze.
Check on Twitter real quick. Can you see if
MetaTrader?
Do you have anything moving on your US 500 chart?
There we go.
There it is. It just finally updated, and it's one big jump up there.
Couldn't even calculate it.
So US 500 just ripped all the way up into 38.40 or above. There you go. So now, there's no one entering on that candle with any measure of precision or nimbleness. Okay, anytime you see anybody sharing a chart, like always after the fact, here's my entry, and here it is, here's what I got in it, that's fake. Okay, because you can't even do it with the demo. Like, it's not going to fill you. So it's nonsensical for these folks to come out here on a day like these market reports. It's no way, absolutely not going to happen. Now, if you look at the lows right on the hourly, now I'm specifically looking at ES because I'm not concerned about US 500 now.
Nice.
I'm not sure why there was such a big delay there, but it has very close movement to the ES. I'll maximize this one. I'm looking at the other one. All right, so now we have relative equal lows on this morning. Buy sides resting right at, on your hourly chart, I have not changed my time frame. The high of 38.67, there's buy side resting just above that. Now, if we can run above that, that would be a candidate to see if they want to take that and then reject it and then come back for the sell side resting below 37.50. I don't personally see them coming all the way up to 39.25. Is that what that is? No, 39.28. If you look at the high on the 1st of November, I'm not interested in seeing that, but I would like to see it go above the high at November 8th at 11 o'clock in the morning. They can bump that, and then if it rejects, then it can come back and clean up the sell side below 37.50. And if they can accelerate below that, then back into that 37.05, 37.04 area. That's a scenario that I'd like to see pan out after like the 9:45 a.m. I was referring to earlier, let the equities market open up. This here is this absolute gambling. And it looks incredible. Like, it feels like, man, if I could have just been in that 100 handle move that happened like that. If you're wrong, folks, I'm telling you, if you're wrong, it ends you. So it's not a matter of, oh, well, you should know better. No, I know that this is going to hurt you. It could hurt me. Like, I gave you my honest opinion about what I felt is a likely scenario this morning. Why don't you trade at ICT? Because this is what can happen. If I pushed it with a live account, this would have crushed it. Like, it would have been bad. So, again, this gets back to what I was referring to, I think it was last week, over the weekend. I'm not sure when I was doing last stream or space where I was saying social media equity curves, being popular based on, showing stuff with like a MyFX book or whatever, that puts you in a position where you have to constantly perform. Like, you have to do it. And I'm not trying to teach that in any of my students, and I don't do that. I want to be in a market where it's really easy to see what it's likely to do. Where is it likely to go? Why should it go there? And if I don't have that one-sidedness, now I don't have the one-sidedness today because CPI numbers, rocket fuel. Whatever they're going to do with the marketplace, they're going to do it, regardless of what my opinion is, what your opinion is, whatever. It's just going to just take off. And you can see it's moved a lot in just a short span of time. If you drop down now, go into a 15-minute time frame, you can follow along on your US 500 chart too. You want to have a horizontal line on the high. Basically, drawing mine as I'm going. And we just ran through that high of 38.57. So now you want to watch what it does here. Because everyone that was short, their stock would be all above those relative equal highs on your 15-minute time frame ES chart for those that are following along. Make sure that it looks like that one. Yeah, you got relative equal highs there too. Now, that bear flag idea, remember I was talking about earlier? Retail would follow along with that and go short. What I look for is it has to go up into at least a short-term premium, which is why the fair value gap was even mentioned in the first place, because it has to come up out of that to be even considered. Before we even began seeing the CPI number come out, I outlined why you shouldn't be pushing it with a live account. Don't even try to make it with real money because it's going to hurt you. You wouldn't be able to get filled. That's the characteristic with this market report. Okay, you're not getting filled. If you're going to get a fill, you're going to be filled so far away. If they even allow it to be filled, it'll be so slipped. And slippage is where you're trying to get in at and where you're actually filled. On a day like today, you don't want to be slipped 50 handles. Okay, that's not fun. Because then you're going to be stuck trying to decide, is it something you want to hold on to still? If you made the mistake of getting in. And I'm anxious to see if any of you were able to get your demo account or paper trading account to fill you on TradingView. Go down into a 5-minute chart. Okay, and again, that is over 100 handles in less than 10 minutes. Can you afford to be wrong on a day like this? That's what I'm trying to, make you understand. Seeing big moves like this, it's intoxicating after you see them move. Like if you aren't watching it live, or you're so brand new to this industry and you think that you can actually get in here and push the button and get in on these moves right as they happen, it's not happening. That doesn't happen. Okay. So knowing that that is what this market report does, it's important for you to know what the economic calendar says. And when these numbers like this come out, FOMC, rate announcements, and CPI numbers, they are dangerous. Like you can have your clock cleaned expediently. Gone. Thanks for playing. ICT included. I did not do this to be incorrect, on purpose. I genuinely gave you what I felt is a likely scenario, what I would like to see pan out. And if I would have done with a live account, this would have hurt me. So knowing when not to do something and why you're not doing it, okay, that gives you peace of mind. It's never going to bring me a fear of missing out. Like I don't look at this move and say, oh, but I wish I would have done. I don't do that. I don't think that way. We've already swept that 38.67 level on ES, the relative equal highs, if you're following on the US 500. We've swept that. So now we want to watch and see, does it give us a shorter time frame post 9:30? That's what you're looking for. Now, it could just tear off and keep going higher. But we have a really huge imbalance now from the CPI number to where we are right now. So I think that we have a little bit of range to explore. Note that 3850 on ES down into 3815. Okay, so 3850 to 3815. That might be something we explore going into the equities open at 9:30. I'm just highlighting that range because I set it here and I want to make sure it shows up in my chart later on. And I didn't see this, but I'm certain if I go through my tweets, someone's going to ask, what's the data? How do you read the data? I don't ever care to know what the data is. I just anticipate a lot of volatility on certain market events like this. And I study it. I'm never going in and trading CPI. I've never, ever, ever told any of my students to go in there and say, all right, you're going to trade the CPI number. And you're going to get in there ahead of the CPI number, and then there it is. No, we treat it just like FOMC. We want to see it hit the market, watch and observe what liquidity they take, where they aim for. And if you look at the 5-minute chart now, looking back as far as yesterday, candles at low. 15:45 on November 9th, Wednesday, November 9th of November. Look at the 15:45 candle, that low. If you're following along on US 500, it should be basically the same thing. So it's walked sideways ahead of this report coming out. I outlined how retail would see that as a bear flag. And I wanted to see it go up into some short-term premium. It did so. Now, if I was wrong, then it would go up and obviously run at that previous high. We've done so. Now it's just hanging around. We have some time. It's only 8:42. So we're really an hour away before any trade would be taken by me. I'm not against taking trades on CPI number days. I just don't want you thinking that it's advised or smart to be taking a trade ahead of CPI number. I don't care how long you've been doing it or what you think your tools are doing. I got it wrong right in front of you. And that was a genuine opinion about what I felt was likely to happen. And that's what these reports will do. They will crush you. And you need to do this a dozen times in a year to realize, hey, this is probably not something smart or safe for me to do. Let me wait and see what the market does after that explosion of volatility comes in the marketplace. Because there's trades that will be taken later on in the day. That's fine. But I don't want you feeling like you have to know what this is going to do, because I don't know what it's going to do. CPI number is a highly manipulated data release. Just like FOMC, you don't know what the Fed's going to do. You don't know what they're going to do in repricing the currencies, because they can come out dovish or hawkish, and that might mean something to somebody else in the analysis. But the market reprices and starts going the opposite direction. You've been in that situation before. It's supposed to be good for the currency, or good for the market, but it goes the other way aggressively. And then they'll say, well, it was the market discounted that. It was already priced in. Why didn't you say that before the news came out? Because it's all bullshit. We have to wait for this explosion to happen. And then once the dust settles, then we can go in and pick our shots and see what happens after. Like right now, everybody that went in this today or was short just got taken out. Imagine you were short yesterday.
Tough.
Holding on, thinking that bear flag that I outlined was going to continue going lower, breaking lower and keep going lower. Well, they just got removed from the game quickly. Now, what I like to see is I like to see things like that and then look to see if that narrative can be utilized later in the day. They used, in my opinion, the CPI number as a vehicle to justify in the public side why the market went up to this level where we're at now, above 38.67. There was liquidity there. So that liquidity now has been engaged. Do we go higher and start working towards, a higher close on the day? Or do we work back lower in that range that was just created with that big 2 or 3 up candles on a 5-minute chart?
I think we come back down.
And then work towards that sell side below 37.50. That's what I'm looking for. I don't have a setup right now. But now, because we were so quick to get up there and take out yesterday's buy side liquidity, they did it on this high impact news driver. They did it where people are going to see that going into the 9:30 in the morning equities open. So it's going to create what? If you sat down in your charts, you wake up now, you look at this. This looks extremely bullish. Does it not? I mean, if you just looked at this 5-minute chart and you don't have anything else considered at all, this communicates a fevered pitch for markets that want to go higher. That's a basic perception that anybody would come away with looking at that. The contrarian in me is thinking, okay, they use this to go up to that buy side. Can I use that and turn it on its head and then look for something that would justify why we can go back down into that range, what I outlined? Which, if you look at the low of the candle, and this is on ES, so if you're looking at a 5-minute chart, you're going to go back, not counting the candle we're in right now, you're going to go back 2 candles. So that low on ES is at 38.53.5. I have that noted down to 38.15. So I'm looking for something in that range post 9:30 opening. Now, the worst case scenario would be is it just keeps on going higher and I have no setup. Okay, that's the worst because I'm not trying to get in anything. It can trade down into that range and then resume going higher, and then I'm wrong there. But I would be wrong, and if I could take a trade. So that's a different kind of being wrong. Wrong like this, I'm fine with, because I'm illustrating why I don't trade these market reports and why it's dangerous for you to try to do it. Because you don't know. No one knows what they're going to do, okay? And because there's manual intervention, you're opening yourself up to unlimited damage. Like it's unlimited how far and fast they can take these markets and reprice them. Look at how much it's moved already. So I'm thinking that range is too exposed. It's all one-sided. It happened too fast. And go down into a 1-minute chart on ES. Now, if you highlighted a range that I mentioned moments ago, that range being at the low of 38.53.5 ES, 38.53.5, down to 38.15. Now, on a 1-minute chart, you should see a fair value gap right at, on a 1-minute chart on ES.
I know it's not ES.
38.50 even, and the low on 38.53.5. So there's a smaller fair value gap with a down close candle at the 8:32 minute marker on ES. So if we drop down into that, say it drops down to that, and then it takes out the high again, whatever high would form prior to it dropping down there, that to me, I'd have to concede and say, okay, this is probably going to go into a firmer close for today. But I'd like to see, here's what is important. That fair value gap that I just outlined, if we can get below that, and then it can act as a resistance and a failure to, in other words, engage price and send it higher, If there is no accumulation that takes place at that down close candle on the 1 minute chart with that fair value gap, and it goes below it and comes back up and starts acting as resistance, I'll take every fair value gap that forms after that with the anticipation that we're likely to trade down into that 38.15 level. But it's a time filter applied to it because I want to see the equities open, and we still have, 40 minutes before 9:30. And a safe time for you as a developing student would be waiting till 9:45. You're going to probably miss trades. That's okay. If you're learning how to do something, it's important for you to be comfortable with missing moves and not knowing why you missed it because it's harmless versus getting into something, not knowing what you're doing, being harmed by it and not understanding why it hurt you. It'll become toxic to you. Trading will feel toxic. You'll develop fear and anxiety, which is the hardest thing to get over. Fear of missing out, that's easily fixed because once you have a model, you don't sweat these types of moves. You know that there's other moves that you're going to be able to capture, and it'll make sense for you to be engaging it. But fear and anxiety of losing money, that's a really hard one to fix because it's easy to talk yourself into thinking, wow, I just had a losing trade or I had a series of losing trades. What happens if I take the next 10 trades and they're losers too? Your mind gets overactive. So all those things come into the equation when you start looking at real-time data and considering pushing the button. If you've done the exercise this morning, we'll take a photo to Twitter real quick. If you push the button, there's so many people tweeting to me. Not tweeting to me, texting me. Please don't do that because it's a distraction. A lot of my students know my cell phone number and they abuse it. I don't rarely ever reply to all of them, but if you push the button and you can show me your execution arrows, do that. Tweet that to me now. If you couldn't get a fill or if it rejected your order, say so. There you go. Armando, order rejected. Welcome to the real world. See that? But you'll never see that. And that was on demo, Armando says. So that's what I'm trying to explain to you. There's people out there that are going to pretend that they did something stellar. And you'll probably see it. They probably will show they bought the low. Okay, or they'll use the arrow on a candle like that one that formed at 8:30. And because it doesn't show you the actual price, I think it would be better for TradingView to actually have the arrow populate the chart at the price you got filled at. You'd see a whole lot less tomfoolery in terms of what was being shared by people online. Because if they show you the chart and it has the arrow at the low of the candle, at first glance, it was like, wow, you bought the very low. When you could be near the high of the candle as an entry, if the trades are closed. That's why it's important. That's why I go through and show you my entries, show you my execution, actual price points. If I'm not recording it live when I'm getting in there, I go and I show you where the actual bills were. All right, so looking at the ES right now, again, we're on the same 1 minute time frame. We have had one drive fall short of that 38.67 level, traded down a little bit, and then we went above the 38.67, back down below 38.67 a little bit, into a fair value gap that was formed on the this is 1 minute chart on ES at 38.59 and a quarter to the level 38.66 and 3/4. That fair value gap was engaged at the 8:39 candle on ES. Then we ran at the short-term high that was formed. The only interest I have, because you don't know if it's going to keep tearing off higher, and it can do that. I want to see that fair value gap that I outlined earlier. Just below 38.53 and a half. Again, on a 1 minute chart, you should see it trades down into a order if it does that. As long as it keeps going higher, there's nothing to do. You don't want to keep buying it. You don't want to chase it. You don't want to do anything with this right now. What I'm looking for is I want to see that fair value gap that would otherwise be something I would go long on if we didn't have this big run up like this. In other words, I'm not looking for that fair value gap to go down into it to buy long. I don't want to do that. What I want to see it do is I want to see it trade down into it. Initially, it might want to give the impression it wants to go higher, but I want to see that fail. That's the setup I'm looking for. I want to see that fail, go below the fair value gap. Once price goes below the fair, and it may not do this, but if it does, this is what I'm looking for to actually push a button today. I want to see that fail. And why would I want that? Because the buy side liquidity at 38.67 has been taken. It's been engaged now. And it's done so on the CPI number when there's nothing constructive about the consumer right now. Like it's bad. So I don't need to know what the report says. Like all of this here is just, I'm utilizing it for liquidity only. I knew and expected, and you know now also, that there's a lot of volatility on the CPI number. We observed how it went above buy side from yesterday. And now, is it running higher still? No, it's just hanging around.
Consolidating.
There is no setup for a long in here that I would take. I would not want to take a long at that fair value gap that I outlined, framed on the only down close candle that you see right at 832. That down close candle on a 1 minute chart on ES. That's a bullish order block. And it's coupled with a fair value gap that's formed immediately after that down close candle. If that does not send price higher, if it trades down to it, that's my broken little wing. That's like, hey, this should have sent price higher. If it goes down there and starts to rally, that's good. Because then if it does go below that fair value gap, I'll feel confident that I can take a trade down into 38.15 and maybe even retest that 37.95. Would that be that price? 92, 37.92. But that's the only thing I would do. Like I would let this market do, if it just tears off and goes all the way up to 3,900, I don't care. I don't fear missing it. I don't have any anxiety about, not having been in it because I know what I'm looking for. You might have something else in mind that you want to do. What I just outlined is something that I would be willing to engage. And if that fair value gap fails, that to me would indicate that we're likely to revisit and reprice to, at the very minimum, that 38.15 level. Now, you're probably asking yourself, why that 38.15 level? 38.15, let's go back up to the hourly chart. I just realized there's a lot of folks in here following on the US 500 chart, and it's probably getting very frustrating for you. I apologize. All right, so 38.15. If you look at all the wicks we're on an hourly chart for ES. The candle at 9 o'clock on Wednesday, at 10 o'clock, and at 11 o'clock. There was multiple times it traded up into that area and moved away. Because it has done that, what was actually occurring on those 3 hours, the market has traded up and then back down, traded up, then back down, traded back up, and then back down. That creates a balanced price range. So it can trade down into that area. Now I use 38.15 because it's about near the low end. Because of a big report day like this, there's a lot of animation in price. It can color outside the lines basically and do a little bit more than you would reasonably expect. That's why I chose the 38.15. Do you use 38.15 for yourself if it starts to outline what I mentioned earlier? That's up for you to determine. You can use 38.20. That's a nice number as well. for it to want to trade back down in if it's going to do any of that at all. But that all stems on the willingness or likelihood that that fair value gap that I outlined earlier is even ever engaged, because this could just keep grinding higher and that trade never forms. Do I regret not buying it if it does that? No, because buying it right now after it's done what it's done here makes absolutely no sense to me. I'm buying at an extremely, huge premium with a correction that would take us into even a small move to like 38.40 or 36. That's too much of a range for me to concede with being wrong in. I need to know what I'm looking for. I need to know what shots I'm trying to go after. Right now, we got relatively speaking, we have the three drives higher pattern. I just don't like how smooth the one we're in there right now is. I would like to see the candle we just closed actually come lower. Might want to pop it up one more time. If you look at your 1 minute chart, ES, we just dropped down into that fair value gap that was formed on the 856 candle to the 858 candle. So there's 3 candles that fair value gap. We dropped down into it. I'd like to see that one fail to send price higher. I'd like to see that and see if we can get below the low formed at the 850 minute marker. That would be interesting to see that happen. Then we can start to see if it wants to gravitate towards that fair value gap I mentioned earlier around that 38.50 level. But there's no buttons being pushed right now. This is tape reading. This is tape reading as I teach it. You see other people say, oh, this isn't tape reading. You need a DOM, depth of market. No, you don't. You don't need that. You need to know what you're looking for. And then once you understand what it is you're looking for, you wait. And if it doesn't form, what does that mean? Nothing. You didn't push a button. You didn't risk anything. And yes, you placed time in front of a chart. And that was an investment. It's experience. Most of your time is going to be doing nothing between trades. That's the part that wears people down. And that's the time when you discover what it is you're trying to do as a trader. Because if you don't have a model, if you don't have a method or an approach to want to push a button, if you're just in here trying to impulsively react to, oh, it looks like it's going to keep moving up or it's going to keep moving down, that's gambling. And then you shouldn't be surprised when you reckon yourself. I'm sure there's about 50 people out there right now saying, ICT got it wrong, but they didn't buy it. That's the difference, okay? There's a difference here. All right, so we're at the low end of that fair value gap. It would have to go up here or it fails. I like to see it trade back down below that 38.67. If my son Caleb was here, he could provide me a means of a sounding board. I can bounce some things off of him, ask him, what do you see here? What would you anticipate here? So right now I'm at the point where I'm trying to anticipate what some of you are thinking, what you're probably asking.
Is it going to keep?
Why didn't you talk about this? Why didn't you talk about that? If I didn't talk about it, it's not important to me. Which gets back to, your model is going to be your model. And the things that I'm trading off of, you may not be considering. It may not even be a factor at all for your trade. Maybe a market you're not going to touch or a time frame. Okay, so now notice how we have moved up into the range between 38.60 to 38.80 after taking out the high from yesterday at 38.67. Has there been a lot of animation to the upside after taking it? We had one shallow run above it. We dropped down below it, made a higher high again, consolidated, made a higher high, And now we're about to trade below 38.67, looks like. There's relative equal lows sitting right around, you look at your 1 minute chart, the 850 to 853. Small little pool of liquidity in there. I wish he would just show his charts. You can't trade off my charts. You got to trade off your charts. All right, so we're trading back into that fair value gap. The gap is formed from the high on candle 856. I'm talking about time, to the low on candle 858. So we went below it. Now we're trading back up into it. We're seeing, does it have reason to repel price and keep it from going any higher? So if you're looking at it from a 1 minute chart, if you have the, we'll just say 38, 36 level, from 38, 36, drop a horizontal line there and drop one at the high of 3770.75. Okay. That range, that is a buy side imbalance, sell side inefficiency. That means that the imbalance is to the buy side. It's all delivery on the upside. It is not buying pressure. Okay, because you saw how fast that candle traded. All those prices between those two levels, as I told you, did not get traded. So there's a buy side imbalance, and it's inefficient in sell side. No one had an opportunity to sell as counterparty to anybody that would see this candle. It was like, oh, all these prices in here were trading. No, they weren't. That is a huge gap. And I know most of you don't have the way of seeing it, but if I pull up a 5-second chart, on a 5-second chart, now you want to put this in your chart with a different kind of color. You want to note the low on the 8:30 candle. Okay, but at 15 seconds after 8:30, the low is at 38.15 and a quarter. So you know why I'm talking about 38.15 now. The for I need to make it bigger. Color is orange. And then you want to have another horizontal line at the high of 37.70 and 3/4. So what I just gave you was a real, honest to God, liquidity void. That is a liquidity void. It is not what you think of as an imbalance. That's not a liquidity void. A liquidity void was where there's absolutely no trading taking place at all. That gap where it moved from 37.70 and 3/4 up to 38.15 and a quarter, that was 2 transaction times. 1, 2. That's it. What about the trading that took place between 38.15 and a quarter to 37.70 and 3/4? There was no trading there. So we have a big old open chasm of price action where neither buy side or sell side was offered. Now, I just recently taught this about a month ago, or at least in the last month. I told you what a real liquidity void is. That's what we're going to study going forward. That area down there, that will be revisited. And what I'm trying to see is, do we have reason to expect that in today's trading session today? It might not provide it. Let me go back up to on insurance. So it's a matter of looking for something to justify why the market should move, well, to a draw on liquidity. I like the idea of trading back down into that range I gave you earlier, but the one that has my most interest is the one I identified at 37.70 and 3/4 to 30.15 and a quarter, because that is a absolute liquidity void there. The market will want to go down there. Now, will it go down there to just about halfway and then create some kind of buying opportunity? It could. But gravitating towards that, that's what I'm looking for the rest of the day. I'm not interested in going long. I would not consider buying this at all. I don't care. Even in the PM session, I would not buy it. Would not be trying to buy it, because we've already built in a huge premium. It's one-sided, and it might take until next week before that 37.70 level is repriced to. It doesn't have to happen today, but I'm going in looking for that today. So now, if I have that expectation, and that's my trade model I'm going to be implementing and employing for this market for this particular trading day, if I don't have the setup pan out, or if I have no framework that would logically provide a movement to trade down into those areas, I'm not going to feel anxious about missing anything. I'm not going to be impatient about pushing the buttons, because I need to have things in proper context before I go in and do anything. So hopefully, understanding what it is that I look for, I've mapped it out. You saw firsthand experience why I do not trade ahead of CPI, because I can get it wrong. And if you're wrong on these types of days, it is like a tractor trailer running you over. The first set of wheels hit you. Yeah, that hurts. But you got 16 more that's going to run right back over top of you still. Yeah, it just keeps running over top of you, running over top of you. So you don't want to be wrong on a day like this. So just giving yourself the opportunity to observe, study, see what it's likely to do, and then revisit it at 9:45. Does it give us any reason to anticipate market wanting to trade down into those levels I outlined? If it doesn't, then do nothing. Don't buy it and chase it. Don't do that. There's plenty other days out there where you can be a buyer and it makes sense. Whereas right now, it's so overly built in as a premium. The public's going to want to buy this at 9:30. They're going to want to buy it, and that's also going to build in more premium. And in my opinion, more likely to trade down into the ranges I outlined. There's no reason to chase it. But to hopefully demystify the whole, how do you get past fear of missing out, or how do you...
Are you serious? Wait 1 second, everyone.
Are unforgiving. Like, you don't get a second chance to fix it. Like, you can't look at this and say, oh, I took a small loss, let me reverse and go the other way. No, you don't have that luxury. It moves 80 to 100 handles and real quick. So it provides no opportunity for nimbleness at all. Either you're dead right before the report comes out, or you're dead wrong. Okay. And since it's so 50-50 like that, and there's no room for me to mitigate a loss, like if I see that 100 handle pan out over the course of the AM and PM session, I could get one or two trades wrong legitimately and navigate and fix that, mitigate it. In a move like that in the morning on a CPI number, or FOMC in the afternoon when they usually come out 2:00, 2:30, doing those types of trades, like, you have to be absolutely perfect. You have to know exactly how far it would move against you to know that it's something you can weather by entering before the report comes out, which is stupid. Like that's the epitome of gambling. And I don't teach that. I don't do that. I don't teach it. But by having the understanding of what it is that I'm looking for and understand the elevated risk involved, I don't fear missing these moves. I don't feel like I missed anything. And I don't feel like I'm bleeding out in front of you because I explained to you that this is a market move that I'm prone to be incorrect about. So I fear nothing. I don't feel like I've missed something. I don't feel like I've failed. I don't feel like I've hurt myself. I didn't take a losing trade. I didn't lose any money. I had no negative engagement whatsoever. None. That's how you have to study. You have to keep your trading studying like that, no emotion. I've outlined what I would like to see for the rest of today and or going forward. I want to see that liquidity. That's a draw now. And we have to look for the market to indicate that it's done so. In other words, done so. I didn't say what I was supposed to say, right? It's got to have a shift in market structure where it looks like, okay, we've done enough pressing higher. So wait for a shift in market structure, but time first. What element is that? It's going to be the 9:30 opening. They're holding this into a premium. So at 9:30, Average Joe and G.I. Jane, she just got her trading terminal opened up. She's ready to go out there and start shooting things. They're going to see this as a premium. Not in the sense that we see it. They see it as, I didn't say that right, actually. They see this as a indication that it wants to go higher. Whereas we see it as a premium, it's too expensive right now. So it's better for us to anticipate a correction lower into a discount versus buying at these elevated prices when it's likely to reprice to a discount. And then anybody that would be going in and buying it right on the opening at 9:30, they suffer, drawdown or maybe you can get stopped out or caught offside. I'm going to try to hang around here until 9:45. We'll see what we get. If I can find a way to push a button, folks, I'm going to do it. ICT's gambling. High roller. But I took you through the process of I don't trade on these days, study them. And hopefully it's convinced you that it's a day that you really can't trade it. I mean, let's be honest, you can't. This is not a trading day. You can observe it. I mean, it's really good study, and it gives you a lot of feedback in terms of what you think the market's likely to do and where it's going to go. And I'm only interested in seeing it, trade into these areas that I mentioned thus far. So I'm going to take that first fair value gap off my chart, and I'm going to take the fair value gap, not the fair value gap, the range I gave you from 38.53 and a half to 38.15. I'm going to take that off. So the only levels I have now is base buy sell liquidity pool high at 38.67 even, and I have now 38.15 and a quarter and 37.70.75. Okay, those three levels. That's the only levels I have on my chart. There's nothing else on it at all. And I'm watching to see what we get in regards to the opening at 9:30. This thing could just keep grinding like a little higher each time, then sideways, small little correction, grind slowly higher. That's the worst case scenario. And when I was a younger man, I got hurt a lot trying to do that with bonds. I had less than 6 months experience, and I always saw like bearish divergences on the stochastic, and I was using an hourly chart to do it. And every time I saw a bearish divergence, I was trying to sell short because I was like, okay, it went up to give me a bearish divergence. That's what I was viewing it as. Not realizing that, the profile could potentially just keep grinding higher. And buying it didn't make any sense, and trying to short it made better sense. But I ended up getting smashed because I would do 15, 20 different trades going short, and each one being worse than the previous one. So that's always a problem on a day like this. So that's why I outlined that liquidity void and outlined it, mapped it out for you, so that you know what you're looking for. Even if you don't have the 15-second chart, I can tweet that when we're done, and you can actually see the liquidity what I'm referring to. But those pockets in price action, those porous wakes, okay, where there's no trading at all, they are some of the best draws on liquidity. But you unfortunately have to sit and you have to wait for the market to keep putting enough people in as counterparty. Like every single one of these highs on your 1 minute chart, someone has tried to fade that and go short. Now, I'm telling you, I'm interested in being short, but there's been no setup.
Yeah.
Every framework that I've given to say, okay, let's see if it does this, it just keeps grinding higher. But it's not grinding a lot higher. Notice that it's just a nuisance, going higher. So there's nothing that excites me about buying it. And as much as I want to see something that gravitate towards that 38.15 and a quarter level, nothing is in play yet. There's no setup. So I can see how when I was a 20-year-old, how I would have really hurt myself multiple times in here trying to do something with an indicator versus just waiting for price to show its hand. It's not done that yet. So we're above 38.67 still. We've had 1, 2, 3, 4 times we've moved into a higher high, but very shallow. It hasn't even been 20 handles above yesterday's 38.67 buy side liquidity pool. Not to say it can't go higher. I'm just saying it hasn't done so yet. So take a gander at the daily chart real quick.
Keep looking outside because looking at this screen, man, like I need some sunlight.
All right, so let's take a look at the daily. I'm double strong here now. Tell you what I'm doing here. Hold on a second. All right, so if you go up to your daily chart on ES, if you're following on US 500, I'm not sure if it's going to line up the same way. The candle on September 15th, 2022 is a Thursday. The closing price at 39.19 and a quarter to the opening price of candle September 16th, 2022 is a Friday. That opening price at 39.04. So again, the closing price on candle September 15th, 2022, that is 39.19 and a quarter. And the opening price at 39.04 on candle September 16th. That is a fair value gap. And while I don't subscribe to the idea of it going above 39.28 high on November 1st, they could still push this into that retest of the fair value gap that I just outlined. So you want to have that on your chart too. So that might be just a little bit more of a flex going into the open, and then maybe you can see some kind of an attempt to get down into yesterday's highs, 38.48 and 3/4. If you look at the candle, no, I'm still on a daily time frame, by the way. If you look at the November 1st high and compare that with the high on October 28th, November 1st is slightly higher. That's the reason why I'm not a fan. Even though if you go all the way back over to the 20th of September, you could argue and say that's relatively equal highs. And yeah, I guess you could. I mean, it can do that. I'd be wrong, but I don't subscribe to that at this moment. Actually, if we go above that, I don't see that as going above those relatively equal highs and then fading, going lower. I would think if it was going to go there, it's going to go above 39.81. So that's why I'm saying I don't like the idea or subscribe to the idea that the 1st of November's high is the draw. I could be wrong. I'm dropping back down to a 15-minute time frame. Now with that fair value gap on the chart, and you can see how it looks like it wants to reach up into the low of that one. It's just above 3,900, so like 39.02. If I was booking and making market for ES, I would hit 39.02 and then sink it below 38.67. Right at the opening of 9:30. Like I would run it there and then collapse it to go back below 38.67. So 39.02, hit it, maybe 39.05, flex into that fair value gap one more time, and then reject that, send it down to 38.67. That's how I would make the market for ES if I was doing it. Because they're going to want to buy this trade at the open. Okay. Green screen to sleep. I'm not sure if you can still hear me. Can you hear me?
Now we can.
Can you hear me? I'm waiting for a tweet. Dreaming of electric. Thank you. You may hear the painters upstairs stomping around. I apologize if that's the case. I promise you I'm not conducting line dancing instructions. I don't know where it comes from, but it's right off the cuff. All right, about a minute and a half. The open at 9:30.
Let's see what happens.
I promise in 2023, we'll have days where you'll see me calling the markets and moving. Right now, today is an opportunity for you to see why we do not do CPI number and treat this the same way. I don't need to do this again for FOMC. I've already done that in the past too, but these two types of reports, hands off. Wait until they hit the market, wait for the market to open up, and then let that opening range happen, that first 15 to 30 minutes, let that happen. Then you can trust your technicals. Right now, it's all about making it attractive. They're putting lipstick on a pig. Nothing against pigs.
A few more seconds.
Every time they drop something upstairs, or if I'm in another room, I'm freaking out. we had Canadian hardwood floors. In this house, it was purchased. The builders, they had it done custom here, and it's a really really nice hardwood floor, and I just don't want to mess it up. All right, 9:30 opening. Here we go. Watch that fair value gap. Run at 3902, 3905 level. See if we get any kind of reaction off of that. I'm on a 5-minute chart right now. All one-sided, just pushed right from the CPI number to 830. 3900, they call it a psychological level. That's a level where there's a lot of liquidity sitting there. A lot of large funds and such have their stops above that, thinking it's safe. And that's another reason why I put your attention on that fair value gap again. But we've already traded there, ICT. Yeah. And I don't teach supply and demand where it's one and done or we demand fresh zones. We don't trade in zones. There's always going to be 3 levels if it's a range of like a fair value gap. It's going to be the low, the midpoint, or the high. Okay. And based on where you are in the grand scheme of market structure and your market profile, not market profile in the sense that like that uses this horizontal, vertical, horizontal volume bars. I don't have any faith in that. But profile is like a roadmap, if you will, of the day or week. See, like that crashing sound like that, it makes me want to go up there and start spraying. like, don't mess my house up, man. Okay, so on the 5-minute chart, we have near-term sell-side liquidity resting at around 38.70, 38.69. You can really see the 3 drives higher on the 5-minute chart. Nice. If we can get a lower high on the next 5-minute candle, and that candle closes, then we would have essentially 3 swing highs. Right now, we don't have it, but it's likely to pan out. I would like to have seen it trade up into that fair value gap, then create that swing high on the 5-minute chart. That would be a good context to see if we start seeing a move lower into that 38.69 level where sell side's resting. Storm Warrior. I always record these Twitter spaces, but I don't put them on my YouTube because sometimes I lose control of my tongue and talking language I don't really want to have on the YouTube channel. But the playback is available on the Twitter. Just find the link and click on it. I'm not sure if they expire or not. I know there's a couple guys that are taking my stuff and putting them on other places. I don't know what they're doing with it, but
For the record, ICT, if you are watching, I have this for my own studies, and it shows that you're not recording this session, so
you're welcome.
Took the liberty of recording it live.
Let's go down to a 4-minute chart. Nothing there. 3-minute, nothing there. 2, and then 1. A 1-minute chart, you have a fair value gap on the 9:30 candle to 9:32 candle. See that? This will be an aggressive, really, really aggressive one. It's relatively small in terms of risk. And only in range, not in the risk that it wouldn't go higher. Yeah, there's a couple people tweeting where you can get my archives of the Twitter spaces. I have no interest in managing that. I don't care. I don't care to. Once I said it, I said it. It just rants. All right, so on a 1 minute chart, you want to have your chart kind of like stretched out vertically. Really, really good. And they've been loud the last 2 days, but today they're like really being loud. Look at your candle at 9:32. Okay, it should be a up close candle. Draw a either a trend line or a rectangle, if you will, from that candle's high and the low of candle 9:30. Okay, there's a small little gap in there. Small little short term shift in structure at the 927 low. The only thing stands in its way is that it didn't hit that fair value gap. If it would have hit that fair value gap and traded up into that 3902 level or 3901 and 3/4, if it would have hit that, if it trades to 932, I would be short that. I'm just putting it out there right now. It's just to study it for right now. I'm not pushing a button on it. So if we were comparing and contrasting, like what would make me want to take a trade? Why would I be hesitant about taking a trade? I get questions all the time. How do you know when to pick this and when to pick that? I like that fair value gap up there. I'm sorry, I was saying fair value gap. The volume imbalance at 3902. I like that level. If it would have hit that first, we haven't seen that. Looks like it wants to take out that 3867.
Get some sunlight. Been looking at this chart since like
on your 1 minute chart, you should be able to see how there's relative equal lows on the candle at 850 and the candle at 853. There's sell side below there. And you have the gap down at, what is it? 3852, not 3852, 3850, and those are prices. 3850 even to a low of 3853 and a half. So that fair value gap. That's a discount array. I know there's going to be complaints about this. This would have been so much better if you would just let us see your charts. But this is, to me, much more engaging because it's allowing you to do the work on your part. But it's harder. Yes, it's supposed to be. It's supposed to be. If it was easy, everybody would be doing it. The candle at 935 should be an up close candle. I don't want to see it go above the midpoint of that body. I want to see it, stay heavy. Like, man alive, I'm ready to go up there and start swinging shit. I've had to leave, several times in the last week or so because it's just too much for me to take. Like I do. I understand they're working and all that, but good grief.
we're gonna come up to this fair value gap right now.
Okay, so if you take that candle I mentioned at the 9:35, good grief, at 9:35, if you put a Fibonacci on that one, and you're measuring, what you're doing is you're measuring that candle's high to low in that 50% level, that's midpoint, okay? That's called mean threshold. That's the halfway point of that candle. We don't want to see it go above that. Now it's just momentarily went just like a half a point or something above that, and now we're reacting nicely off that. That's what we want to see now. We want to see that continue and heaviness remain into 38.67, maybe accelerate down in 38.52. Nothing else would make sense. Going back above the mean threshold, we'll just call it 38.85. Anything above 38.85 is a no touch, and it would be no interest at all for me. And I'd have to wait until probably 10:30.
You want to start breaking that area?
It feels weird without Caleb not being here. Usually I'm talking to him. He's asking, what about this? And what about that? And then I'm usually asking him, don't say nothing right now. I'm thinking. Growing up under ICT, it's not easy. I think these painters are pissed off. They're up there stomping around. They're getting paid good money. They would calm down. Okay, same thing I just outlined moments ago with the candle on 9:35, a 1 minute candle. We want to see the candle at 9:39. We don't want to see the half of that candle give up its ghost either. Which we don't want to see it just roll way over top of that, because then it would mean that we're going to go up into that fair value gap at 38.91 ish or thereabouts.
Solana's at $17. I should have bought yesterday at 11, bro. All right, 12.
This is not a good technical day. So if you're looking at it technically,
11.
there isn't a lot of cleanness to it. It's a lot of just pushing higher, and just really sloppy, static price delivery.
I'm gonna let this video run until around 10 a.m. and then I'll go ahead and update you guys later on. But I'm not sure how long ICT is gonna be on live, but I'm gonna go ahead and shut off the camera at 10 o'clock. I think a 2-hour video is more than enough. If no opportunities presented itself, it's already 9:45,
Now look at the range between the high formed at, again, everything's on a 1 minute chart right now. Look at your high on 9:30 to the low formed at 9:42. The only imbalance that exists in that range is between the high on 9:32's candle and the low at 9 930s candle. So that little tiny little fair value gap right there.
Right here.
And it's relatively smooth if you look at the candles at 932 to 936. So that might be revised, traded up to. That's what I was saying. If we go through the midpoint of the candle at 939, that would send the algo up into that area there and revisit that. Now, do we trade to that level? Roll over top of it, make a higher high? Good. Because that fair value, no, I want to call it a fair value yet. The volume imbalance up at that 3902, I would have favored that being hit first at the 930 opening, but we dropped down. So that may have been what we've done. We dropped it down. Getting people want to chase it, put their stop above the high at 930, and then they run into that volume imbalance at 930. Highs. Take out 3902, 3903, maybe 3905. Look at your candle right now in 1 minute, how it's coming back down into the candle at 944. That right there, I like to see that. And now I like to see it move continuously higher up into that fair value gap and maybe even into that 3902. There's smooth highs at the 932 level. I'm sorry, 932 candle rather. They have been repriced too. There you go. Back up in that fair value gap between the 930 candle and the 932 candle. Fair value gap is what I'm referring to there. That was we got through the candle's midpoint on that 939 1 minute candle. We gravitate back that fair value gap, which is what we've seen here. Because we did not trade up to that volume advance at 3900, 01.5 ahead of the 930 opening or right after 930, I'm suspecting that that's what we'll likely try to gravitate towards. It can respect this fair value gap here, but because we didn't trade the volume imbalance at 3900, 3902 area, I would be leery taking that short here. If I didn't have that volume imbalance to contend with, I would sell short here, but I'm not doing it because I want to give it a chance to see if it wants to run into that volume imbalance. And nothing in this price action so far is terribly exciting. It's nothing to be worrying about missing. Just small little movements so far with really just, nothing terribly exciting. All right. Fair value gap now that I've been talking about for the 1 minute chart that has now been repriced to, not rebalanced. It's been completely repriced to the low of the candle at 930. And we want to see if it wants to run for the buy side. It's resting on anyone that went short today at 930, trading up into that volume imbalance at 3902, 3905 in that vicinity. Earlier when I was talking about how you see that 1 minute candle trading back down to the high of the candle at 944, that is my immediate rebalance. So it trades down and overlaps the previous candle. When you're bullish, that's a buy. So it acts like a fair value gap. So you can go long in that and use the stop loss would be right below the candle that you're looking to overlap on. That it's just a really nice high frequency entry. It happens a lot, every time frame, multiple times. When you watch me run up accounts real quick, many times I'm using that. Here comes the opening range high. That comes in at 38.99 and a half. So we're going to be looking for 3,900 to be traded to and through. Same thing here. Candidate for immediate rebalance on the 1 minute candle. Look at your candle at 9:48. That high. You're going to see it. Like, it doesn't have to. But the fact that we even traded down into the range of the 9:49 candle, I like that because it's ahead of buy side liquidity being likely to be taken. This is like an ultra short term scalping. It should be priced at 3,900. There you go. And bang bounce, give it to us, give it to us. There you go. Oh my goodness, look at that.
I got it.
On better days, trust me, we're gonna have a lot of fun. Right now, this is boring. Let's see if we get a chance to get up into that 3902 level.
His audio is going crazy right now.
Only because my obsessive compulsive is flaring. JB saying my volume. Something wrong with the volume? You guys not hearing me well?
It was too loud.
Ooh. Can you hear me? Okay, cool. Thank you. All right, so we've taken buy side on the opening range high at 9:30. We hit the volume imbalance. Look at the reaction so far. Isn't that nice? Now, it's not trade. It's not give me an entry. It's observing why price is going to go where it's going to go and what it should do once it gets there. It gives us something to frame. Where should formations or reactions occur? Okay, I've done lessons on that. And it's important to understand. Okay, now we're going to reverse that immediate rebalance. Okay, we have not had a shift in market structure, but now look at the candles low on 950 on that 1 minute candle. We traded back up inside the range of the 951 candle, went up to it, immediate rebalance. We want to see if it wants to deliver down towards the sell side at 38.70.
What does fair value got?
A higher high at this point, at like 902 or higher, not interesting to me at all. So I wouldn't want to see that at all. If it does that, it's probably going to keep on pressing up into, and I would be wrong in regards to that old high, which I said I wasn't interested in. And me pull that price up real quick. Yeah, 39. The highs at November 1st. If we go into 39.03s, then I would expect it to try to at least run the high on November 2nd. Right now, I'm giving it the opportunity to see if it wants to keep the high in place that it just took out for 930's high. It looks like it wants to run higher into 3900s. Keep digging higher. So now revisiting that volume imbalance, because we mentioned that that was a likely draw on the upside, we would now look for the midpoint of that. That would be the next objective on the upside, and or its high end. That would be marking it. So like say 39.10, 39.11-ish, thereabouts. These old eyes of mine. And 39.20. Text my wife here. Hold on a second. And live. So I had an opportunity to reject because it was taken out 930's high now twice. So I would favor midpoint 39.10 to 39.19. Okay, down close candle at 951. Potential bull short block, fair value gap that would be repriced on candle 955. So if it starts to rally up here, look for 39.11 and 39.19. Failure to go higher and going below 38.97 and a quarter, three quarters would nullify that idea.
All right, guys, that about wraps it up for today. The live stream is going on still. But it is about to be 10 o'clock in about 1 minute, and I gotta get on with the rest of my day. So I will be listening to the recording again, the remainder of the recording. But yeah, that about wraps it up for today. Hope you guys did enjoy. If you did, leave a like, subscribe, comment, all that good stuff. I apologize for the background. I didn't realize I got like all these shirts going on, a water bottle, you know what I'm saying? Like it just looks disgusting, and I do apologize for that. But regardless, like ICT said, we'll see if it hits 910, and I'll go ahead and update you guys later on with the overview session. So once again, appreciate everybody for watching. I'll see you on the next one.